'Tis the season for taxes, and if you're an Acorns user, you may be wondering if you owe taxes on your Acorns portfolio. So if you're unsure how to pay your taxes on your Acorns account, I'm gonna help walk you through everything you need to know. We're gonna break down how ETFs, funds, and dividends are all taxed on your Acorns account, and we'll also discuss how to determine if you even owe taxes on your Acorns portfolio to begin with. So let's first start off by breaking down what you won't owe taxes on Acorns. Firstly, no matter how much your portfolio and your funds increased in value, you won't owe taxes on them if you only bought and contributed to your Acorns portfolio, but you didn't sell. However, even if you didn't sell anything, you may still owe taxes on any dividends or interest you earn from your Acorns account. The second reason is if your investments are in a retirement account, such as an Acorns IRA, your taxes are deferred until retirement age. Alternatively, if your investments are in an Acorns Roth IRA, you actually receive tax-free growth. Both of these accounts are tax advantage accounts. With that out the way, let's now break down what will make you eligible for owing taxes on your Acorns portfolio. Now, as you know, guys, nothing in life is free. And much like the income you earn from your job, the income you earn from your investments is also taxable in the United States. Because whenever you sell an asset on Acorns, such as one of their funds, a taxable event occurs. And when you sell your asset for a profit, you experience what's called a capital gain. For example, let's assume you invested $100 into your Acorns portfolio and it later grew to $200. If you sold your entire investment for $200, you just experienced a capital gain of $100. Now, capital gains from investments can be categorized into two types. You have short-term capital gains and long-term capital gains. The good news is there are investment strategies that can be used to help reduce your tax burden. Here are some of the strategies on how to reduce your taxes owed from both capital gains and from dividends in your Acorns taxable investing account. Now, when it comes to capital gains and taxes, when holding investments for over 1 year before you sell, you are taxed at the long-term capital gains rate. But if you buy ETFs or fractional shares of ETFs on Acorns and you sell them within 1 year or under 365 days, your gains are then classified as short-term capital gains, and these are taxed as ordinary income. This means that your profits are taxed at your ordinary income tax rate. Yes, guys, this is the exact same tax rate that wages from your job are taxed at. However, if you buy and hold investments on Acorns for longer than 1 year or 365 days before selling them, your gains are then classified as long-term capital gains. Now, depending on your tax bracket, this could provide you with a tax savings of up to 20%. And even better, if you fall into the 10 to 15% tax bracket, your long-term capital gains tax rate could be 0%. Yes, that's right, guys. By holding a stock for at least 1 year before selling, you could potentially end up paying no taxes on your profits when you sell. If you want to see how the capital gains tax rate applies to your specific tax bracket, feel free to check out this capital gains tax rate chart right here for reference. Of course, guys, these are the current capital gains tax rates for this current tax year. You can always stay up to date with the latest tax rates on the IRS website. Next, I want to discuss dividends and taxes, because if you earn any dividends from your Acorns portfolio, you also need to pay taxes on that dividend income, much like with capital gains. Because when it comes to the taxation of dividends, they are also split into two categories. You have ordinary dividends and qualified dividends. Now, ordinary dividends, these are taxed as ordinary income, meaning at your ordinary tax rate based on your tax bracket. On the other hand, qualified dividends, they are taxed at a much lower tax rate. Now, ordinary dividends are taxed between 10% to 37% based on your tax bracket. Again, this may vary by tax year. Qualified dividends, though, they are taxed at rates of 20%, 15%, or even 0%. Again, this also depends on your tax bracket. If you'd like to see how the dividends tax rate applies to your specific tax bracket, check out this dividends tax rate chart right here for reference. Again, these are the current dividends tax rates for this year. You can always stay up to date with the latest tax rates on the IRS website. Now, in order for dividends to be qualified dividends, they do have to meet some specific criteria, mainly revolving around the holding period or how long you own those stocks for. We're not going to get into the specifics in this video because it is a little more detailed. The main thing you have to know for the purpose of filing your taxes is you don't have to worry about this because Acorns provides you your tax document, and the tax document will let you know how many of your dividends were qualified, how many of your dividends were ordinary, so they got you covered on that front. As you can see, you can experience significant tax savings on both capital gains and on dividends earned by simply holding your investments for at least 1 year before you sell. Again, guys, this is another advantage of investing for the long term. So when it comes to your Acorns account, whether you sold your funds for a profit and you experienced a capital gain, or you simply earned some dividends from your holdings, a taxable event occurred in each scenario. But what if you experienced some investment losses on Acorns during the previous year? Well, my friends, you're in luck because you can actually use those losses as tax deductions to help offset your capital gains. For instance, if you lost money when selling an investment on Acorns, you can use capital losses and capital loss carryovers to your advantage. Together, these two strategies can help you earn back a good percentage of what you might have lost. Now, capital losses are the exact opposite of capital gains. Capital losses occur when you sell an investment for less than you paid. For example, let's assume you invested $200 into your Acorns portfolio and you later sold the entire investment for $150. Well, you just experienced a capital loss of $50. But fortunately for you, when you sell stocks or ETFs at a loss, your capital losses can be used as a way to reduce the tax burden of both your current and your future capital gains, because you can claim capital losses up to the full amount of any capital gains that you might have. Essentially, capital losses from bad investments can help offset taxes owed from your profitable investments. And beyond that, you can use up to $3,000 of additional capital losses to offset other sorts of ordinary income. Now, ordinary income is any type of income earned that is taxable at your ordinary tax rate, such as income from your salary and wages. On top of that, any remaining capital losses over that additional $3,000 limit are then classified as capital loss carryovers. This means you can carry over those additional losses to the following tax years to offset future capital gains. There's also no limit on how many years you can carry over those capital losses. Together, guys, capital losses and capital loss carryovers can act as a type of tax deduction for investors. They make it possible for investors to recover part of their losses on their tax returns by offsetting capital gains and other forms of ordinary income, potentially for years to come. So let's bring this all together now and explain how you actually pay your Acorns taxes, because you might be wondering, how are you supposed to keep track of all your capital gains, your capital losses, all your dividends in order to accurately pay your taxes, right? Not to worry, guys, because Acorns completely takes care of all of this for you. Throughout the year, Acorns automatically tracks all your buys, all your sells, all your dividends, and then every year come tax season, Acorns provides you with what's called a Form 1099 tax document. Now, generally speaking, the 1099 tax form calculates all your investment income, including capital gains, losses, and dividends and interest from the previous year. And your Acorns 1099 tax form sums up everything you need to know for filing your investment income along with your regular tax return. When your tax forms are ready inside the Acorns app, you should receive an email from Acorns letting you know they're ready for download. But if you're ready to retrieve your Acorns documents, I'm gonna walk you through a couple simple steps to retrieve them. So let's hop on over into the Acorns app. So once you're inside your Acorns app on the homepage dashboard, you simply wanna click on the profile icon right up here in the top left corner. Once you click on that, you're then gonna wanna scroll down to where it says settings. Right down here at settings, simply open up settings and then scroll all the way down to the bottom where it says documents and statements. So click on documents and statements. From here, you then just have to click on tax reports right here. If you click on tax reports, this is where you'll find all your 1099 tax forms for both the current tax year as well as all the previous tax years. Now, if you don't yet see your 1099 tax form for the current tax year, it means it's likely not yet available inside the Acorns app. Keep an eye out for the email from them, but once it's ready, this is where you'll go inside the app to download it as a PDF form. Now, after downloading your 1099 tax form, it can then either be imported into your favorite online tax software, or it could be handed directly to your CPA or tax professional. Now, one quick tip I have for you is if you're going to be using online tax software, many of them today offer direct importing of your 1099 tax forms, where their software automatically imports all your capital gains, all your losses, and all your dividends. So it really helps automate the whole process for you. Now, for full disclaimer, guys, I am not a tax professional, nor am I providing you legal or tax advice. I just want to give you an overview of the key points you need to know about filing your Acorns taxes. If, of course, you need tax advice, always consult your CPA or your tax professional. Again, if you'd like to check out some of my recommended options of online tax software for using with Acorns, I have referral links below with discounts. Now, if you enjoyed this video breaking down Acorns and taxes, I definitely recommend checking out this video right here, where I compare 5 of the top tax software to consider using with Acorns. From free to paid options, you're sure to find one that works for you. So click on over and I'll see you in that video.